Good evening, everybody, and welcome to our Luxcess Group Market Review webinar. Guys, I trust you have all had a fantastic week since I have seen you last. We have some brilliant content to go into for this evening. So, guys, could I just quickly get a visual and a sound check, please? Can you all hear my voice loud and clear? Can you all see my screen? Just pop a yes in the chat box if everything's coming through loud and clear. Okay, fantastic. Welcome, everybody. So, guys, we have some brilliant content to go through this evening. Let's get started straight away. If you have any questions at any point in the webinar, just pop them into the chat and we can go through those questions together. Okay, so first of all, guys, what we are going to do is take a look at last week. So last week we identified two potential positions. We identified a potential position with the euro against the Japanese yen, and we also analysed a position on the Aussie dollar against the US dollar. So first of all, guys, we will get straight into reviewing last week's content. So we'll take a look at those two positions we looked at last week. We'll take a look at last week's fundamental events on Forex Factory. And then, guys, we can then look to the week ahead. Once we're all fully prepared, then we can move on and ultimately look at some charts. So, guys, starting off, let's move to the Aussie US dollar. Okay, so for the Aussie US dollar, this is the sort of behavior that we were expecting. Okay, albeit we were expecting this to take place over a much quicker time frame than it has done already. So since I saw you guys last week, it hasn't really fulfilled our full expectation. We expected to see the price move up to this area of resistance towards a 71.44, and again this previous area of support towards 71.66. So we were expecting price to reach this level for us to place a sell order at this level, a sell limit order, and then ultimately to see the price reverse and come back down to this support level. So far, we haven't really seen that unfold as we would have expected. So if we take a look closer, what we can see is, of course, on the Monday market open, on the Sunday evening, Monday we came down to test this level of support at 70.65, and then the buyers came back into the market. And by Tuesday and Wednesday, it was looking good for our position. It was looking as though the markets would trigger our sell limit order for the Aussie US dollar, and then we would be picked up in our position as we see the price begin to fall back to the downside. And by Wednesday, this is what we had. By Wednesday, this was beginning to occur. Unfortunately, it just missed our entry on the on the Wednesday, before coming back down to this level, back down to this support at the 70.88 price level. So I thought we had potentially missed our opportunity to get that short position. This is the kind of reaction that I was expecting. And then on Thursday, I was expecting to see the prices continue back to this support level. But as you can see, the buyers came into the market, and the buyers came into the market again on Friday. And this, unfortunately, still hasn't met our entry. It hasn't met our sell entry for a position over the Aussie dollar. So we didn't get filled in our order, and it is possible that we have already had a small reaction off of this level. If we look to the dollar index doesn't look too strong, but we'll cover that towards the end of the session. So unfortunately, the Aussie US dollar didn't quite meet our expectations. Although it did play out how we expected it to. We expected to see the prices come back to this level and then go short. We've got the first half of our expectation is finally being fulfilled. But I want to take a look at this. I want to reanalyze this position going into next week. Okay, so the Aussie US dollar, we unfortunately we didn't make any profits, but of course we didn't get stopped out either. We aren't currently in the position, so I'll review this as we approach the end of the this evening's webinar. So the next chart that I want to take a look at was, of course, the euro yen that we analysed from last week. And guys, this played out fantastically. Pretty much what we expected to occur did occur. And if you can see, of course, on the 4 hourly, if we take a closer look, this is a type of behaviour. These lines were here from last week, from last Sunday evening. And as you can see, it has played out almost exactly how we had planned. So with the euro yen, we were looking for the sell limit order. We were looking for the sell limit on the euro yen. Our entry for this position was up towards the 125 handle. We were looking at 125 around this previous resistance level. We were looking to this level. I'm going to zoom out just so that you can see, there we go, the significance of this price level. We were looking for the supply to come back into the market at this price level, and for the sellers to then take control and push prices back down towards the support, initially at 123.50, but even potentially lower. And we're starting to see this unfold. So what I would like to take a quick look at, guys, is I'm just going to get the an additional euro yen chart up, just so that apologies, one moment. Where has it gone? Apologies, guys, the chart has disappeared from me. Where has it gone? Okay, there we go. Let's put that chart back up now. So what I want to do is just take this onto the macro picture. Of course, this movement that we had on the euro yen, this movement after that flash crash that we had with the Japanese yen and across multiple currencies as well, we saw major volatility within the Aussie dollar as well as the Japanese yen. ever since that moment, we have been consolidating within price, and we are still consolidating between a boundary. We're still between a range, sorry. We're still consolidating between 123.50, and apart from this movement outside of this area, you know, again about 125.50 as well. So we are trading, although it is of course a 200 pip range of consolidation, we are of course on the macro time frame, on the higher time frame. So we're looking at this as each candle is 4 hours. So this is on the higher time frames that we're looking at this. So as we can see it's still in this area, in this zone of consolidating. But what we've seen is a reversal in the market sentiment. So before, we saw the buyers entering the markets here, 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 and here. But when the market came down to this level once again, and let's zoom in, once the market came down to this price level, it couldn't, apologies, it couldn't it couldn't sustain a movement to the upside. It couldn't bounce again. The buyers couldn't overwhelm the sellers. Instead, we had this order accumulation through that level, and now the role has been reversed. And our expectation is playing out fantastically, superbly. So guys, the euro yen is currently trading at 124.70, just below. Of course, this will depend on which broker you have. Of course, the brokers are all pretty much the same prices, but a few of them do differ by 1 or 2 pips. So the current market price is around 124.71 for the euro yen. So about 30 pips below our entry. So let's take a look once more into the higher time frames. Let's look into the daily and the daily and the weekly with this euro yen. So let's just zoom in a little bit more. There we go. So on the daily, although we can see the buyers are coming into the markets, we're still trading far below this this previous support level. So we've had that role reversal. We're now trading this area as resistance, and we've seen the sellers come back into the market. We've seen the supply come back into the market. So again, I want to take it higher once more. This is what we were looking at last week. We were looking at this very bearish, hugely bearish engulfing day on the weekly, this bearish engulfing candle, sorry, on the weekly time frame. So this was an indication of very powerful selling taking place within the markets. The week just gone, if we look at this candle, although it is a positive candle, it is still a fairly weak candle, considering the highs are up here towards 125.50. And, you know, the price did open at 124.20. So there was, you know, some good bullish price action towards the beginning of the week. But when we hit this level, the sellers came back into the market, and we've closed as a fairly neutral to quite a weak positive candle. So although the candle is positive, there isn't really much in the way of strength within that candle. So although we have a positive candle, it is a fairly weak positive candle. So this means that the buying pressure that was in the market is starting to fade. It's starting to subside. So again, this is meeting our expectation on the macro picture. Guys, I think we can be patient and allow this position to play out. So again, let's take that down into the 4 hours. Let's zoom out on the macro picture. And, you know, I'm still holding my target and expectation of around 123.50. And I would expect that to get there around Monday, Tuesday, possibly this week. So we should reach our profit target for the euro yen by tomorrow or maybe Tuesday. And that should secure us some fantastic profit for last week's webinar. So unfortunately, the Australian dollar, US dollar didn't quite meet the expectation, and we were stopped out of, we weren't stopped out of that position. But it did, although it didn't meet the profit target, we weren't stopped out. We didn't enter. So the Aussie US dollar last week, there was no loss, no gain. And for the euro yen last week, we're currently enjoying some fantastic profits. So let's take a very brief look at last week, guys. Let's take a look at the events that took place last week. Let's quickly review those, and let's take a look to the week ahead. And ultimately, there's a fantastic opportunity that I would like to show you in the commodities market. So when we're talking about commodities, of course, we're referencing most commonly gold, silver, or crude oil. Okay, so we'll take a look at the fundamental events quickly, and then we will move on to the week ahead. So guys, as you can remember from last week, we were talking about the bulk of the data, the main data events for the week ahead. And we identified the pound data entering the market on Monday morning, and Wednesday evening, early hours of Wednesday morning, I suppose, early hours of Wednesday morning, this data for the New Zealand dollar. So this data came from the Reserve Bank of New Zealand. And of course, this hit the market on Wednesday morning. So these were the bulk data events. These were the big ones that we were looking at. And we'll take a moment quickly just to review those events and what took place in the market. And then, of course, we can look to the week ahead. So as we expected, we have seen this decline continue within pound data. We were looking at it last week in terms of the, especially the manufacturing production month on month. It's been very disappointing over the past few months, and that trend has continued. The manufacturing month on month has been very poor for January. We had the prelim GDP quarter on quarter. This fell massively from 0.6% to 0.2%, and that fell below the forecast. The forecast was revised down, so it was previously higher than 0.3%, but they revised that forecast down. And as you can see, you know, we didn't even meet that forecast. So very disappointing results there across the board for the pound. GDP month on month was actually negative, which is the first time that, you know, we've had that in over 12 months. You know, so we're looking at negative GDP there. That's if we see GDP figures come out negative over a period of 3, 4, 5 months, what we have, guys, is we have effectively, we have a recession. The economy isn't growing. The gross domestic product of the economy isn't increasing. And if it's decreasing, if it's below 0%, you have a recession in place. So this is going to be interesting, keeping an eye on these figures month on month. So, you know, next March is when we want to be looking at the pound GDP figures. So around the 10th or 11th of March next month is going to be a very important data release for the British pound. Of course, GDP is turned negative, so if we see that continue and a recession could be confirmed, then of course that's going to be very negative for the UK economy. And of course, we'll see the pound sell off quite substantially off of the back of that. You know, we saw it over the past couple of weeks with the euro, where Italy are now in a recession, and you know, Germany are very close to a recession as well. They very narrowly avoided it with last month's figures, but you know, if we're starting to see a pattern emerge, we're starting to see recessions taking place again throughout the Eurozone and across the globe as well. So this global uncertainty is starting to pick up, you know, week by week, month by month. And I think that's going to provide us some fantastic opportunities in this evening's webinar to take a look at. So we had inflation expectations quarter on quarter for the New Zealand dollar. The previous result, 2%, that hasn't changed. So we didn't really see much movement there for the New Zealand dollar. Governor Carney was speaking for the Bank of England, at the economic he was due to speak about the economic outlook and global trade tensions in London. Now, this could have moved the pound significantly. We could have seen some major price movements off of the back of this event. So we had huge potential, of course, when the central bank starts to speak about the uncertainties taking place around the globe, especially that are affecting the UK specifically. So if a central bank is speaking about its own economic conditions, then of course it has the potential to create a lot of volatility within price. Now, we didn't really see too much of that last week. What date was this? This was on the 12th. In terms of price action on the charts, it was fairly steady. To be honest, it's quite a consolidated day for the pound across the board, so we didn't see too much volatility. There wasn't too much action off of this data release, and this wasn't something that we identified, so we didn't expect it to be a big mover for the pound, and it wasn't, so we didn't really have much there. Fed Chair Governor Powell was delivering a speech at the Hope Enterprise Corporation Rural Policy Forum. Again, guys, you know, it's nothing to do with monetary policy. This is what we were speaking about, and this was the main theme. When we see a central bank governor addressing the markets, we want to check whether they are speaking about monetary policy or if they're speaking at a social event. If they're speaking at a social event, then we shouldn't see any volatility. But of course, if they're speaking about monetary policy, then guys, it does have the potential to move the markets very powerfully. So again, we didn't see much momentum, much volatility off of that announcement. Here we have the official cash rate and the monetary policy statement for the New Zealand dollar. Now, although they didn't change the interest rate level within New Zealand, there was some interesting information that came out on the monetary policy statement, and again that they spoke about in the press conference afterwards. So with the Reserve Bank of New Zealand, it had been lowering interest rates back in 2015, back in 2016, I think it was. If we're going to see that, you know, we're going to have to go quite far back into the data. Yeah, it was back into 2016. They were lowering interest rates quite consistently from that 3.5% level. They dropped it down to 3.25, then to 3, and then to 2.75, to 2.5, and so on. So they've been at 1.75% for quite some time now. But there was a hint that the central bank could potentially look to increase interest rates over the coming months. The New Zealand's economy has been surprisingly quite good over the past few months. Now, we had seen a real slowdown in the New Zealand economy on a macro picture over the past 2, 3, 4, 5 years, which is of course why they lowered those interest rates those years ago. But what we're starting to see in this small pickup in the economy is that the central bank could potentially look at changing interest rates. So we saw some strength coming to the New Zealand dollar off of the back of that announcement. And this was what strengthened up the New Zealand. And I feel because the New Zealand and Aussie dollar economies are quite closely interlinked, I feel this is what brought some buying pressure into the Aussie dollar as well. So we didn't really see what we wanted to see in the markets there. So there was some unexpected good news for the New Zealand dollar, and the New Zealand dollar appreciated in value off of the back of that news. So into the rest of the week, just to recap very quickly, CPI data month on month and core CPI data. CPI data was very unflattering at 0%. So inflation was at 0%. Core inflation month on month was at 0.2. So this is excluding energy and tobacco and spirits. Here we go, price of goods, yeah, excluding food and energy. So it gives a much more stable reading. So although inflation data was at 0%, the core inflation was at 0.2, and that met the expectation. So there wasn't too much volatility there. Elsewhere into Thursday, retail sales, PPI data, and core retail sales data, all very disappointing. Core retail sales data, I don't think we've seen data that disappointing for a very long time now. Yeah, it has been a very long time. So a good number of years. So very poor figures for the US dollar again, which didn't help our Aussie US dollar pending order. I was expecting slightly better figures, although the forecast was at 0%. I was expecting much better figures than that. And again, retail sales month on month, very disappointing. So into Friday, retail sales month on month for the pound, on the other hand, was better than expected. 0.2% was the forecast, and we came in at 1% actual. So some good data there for the pound, but again, I didn't expect it to be really a huge mover for the pound. So guys, do you have any questions at all before we take a look at the week ahead? what we're going to do is quickly scan Forex Factory and look, like we did last week, for any major potential data releases. And then when we've identified those, then we can look to the markets. So if we don't have any questions, we will move on. Guys, of course, please don't hesitate to ask any questions. We always have time to go over questions. So first of all, straight into Monday morning, it's quite quiet. There's no major data expected, but we do have a bank holiday within the US. So we have President's Day, which is on 18th of February. So we do have a bank holiday in the United States. So we might see a bit of a slower market on Monday afternoon. So of course, guys, we have certain markets that take place each day. So we have the Asian market session, we have the UK and European market session, and of course we have the US and the Americas market session. So the Americas market session. So all of North America and South America as well. So basically, with the US bank holiday tomorrow, we're going to see a lot less liquidity within the markets. This means there'll be a lot less buyers and sellers within the markets tomorrow afternoon, because they are not trading within the US. The banks are not trading. The banks and large institutions and hedge funds, they won't be they won't be, you know, they won't have traders on the floors. So we could see a slower afternoon on Monday, but that's not necessarily always a bad thing. Okay, some bank holidays we see some great price action. So we should see some good price action tomorrow. Should be a good day in the markets tomorrow. Moving into Tuesday, we have a big one. We have the monetary policy meeting minutes for the Australian dollar. So these are released, as you can see, once a month. Sorry, 11. There we go. 11 times per year. These are released, and of course, these are the minutes of the meetings from the Monetary Policy Committee. So the Monetary Policy Committee has had their meeting. They've discussed a range of issues, potential problems and potential solutions, and they are publishing those meeting minutes on the early hours of Tuesday evening. So Tuesday morning, sorry. So where it's those two words, monetary policy, where it is monetary policy, we could see some large movements with the Aussie dollar at this time. So Tuesday, we have to look at the Aussie dollar, and we may see a lot of volatility. So you know, when we wake up Tuesday morning, because this will be taking place at 12:30 a.m. UK time. So when we wake up Tuesday morning and look at the Aussie dollar, I would expect to see a very large daily candle. And the reason being is because of these monetary policy meeting minutes. So with this in mind, guys, you know, this is something that we're going to have to think about with our pending position, with the Aussie US dollar pending order that we still have in the markets. So with this data, this is something that we have to be aware of. So we will take a look at the Aussie US dollar after we take a look at this week's fundamental events. Okay. So we have the average earnings index 3 months on the year for the pound. I wouldn't expect too much volatility from this. I would expect some good movements on the pound, but you know, not. I wouldn't expect 50, 60, 70, 80 pip movements from this data release. Any movements caused by this data release, I would expect for them to be quite small within the market. So, you know, if I was trading the pound on Tuesday morning, I wouldn't expect this to, you know, to change the dynamics of the pound for the day. I wouldn't expect it to be a very powerful data release for the pound, is what I'm trying to say. So I think Tuesday, really, you know, the monetary policy meeting minutes is where we have to be concerned. Or not really concerned, just aware. Wednesday evening, we have the FOMC meeting minutes. Again, guys, this is, you know, the Federal Reserve Monetary Policy Committee, and they, you know, they group together 8 times per year. And again, they discuss their monetary policy condition. They discuss the, you know, the current economic health and / weakness. So, you know, again, for the US dollar, we could see a lot of volatility. Guys, let me just put it into perspective. This data release here is probably going to be very similar to this data release here. Okay, they're both monetary policy meeting minutes. So both of these data releases are both discussing monetary policy. So we have the potential for both of them to be, you know, causing quite powerful movements within the market. So again, you know, for our Aussie dollar, US dollar position, you know, it couldn't be more volatile heading into next week. We have both monetary policy meeting minutes for the Aussie dollar and for the US dollar as well. So moving into Thursday and Friday, employment change data and unemployment rate data for the Aussie dollar. I wouldn't expect too much there. I think the bulk of the data for the Aussie dollar is on Tuesday morning. German flash services PMI data for the euro. Guys, this could be a big one. This could be a big one for the euro. And the reason being is because these figures have been getting worse and worse as, you know, the months have been going on. So last September, we had some good figures at 56.5, and since then they have been fairly disappointing. They've not really been meeting expectation. They should be a lot higher, you know, back up towards that 56, you know, 55 level. You know, although last month was 53.1, if we look at the actual, the previous came in at 51.8. So again, you know, we're looking at very disappointing figures for German flash services PMI data. So the potential for this, guys, let me explain it a bit more. Where I mentioned Germany just narrowly avoided recession, it's these figures, you know, they need positive figures from this industry. So I want to take you to this note here. So above 50 indicates industry expansion. Below indicates contraction. So what we have, guys, if we have a figure that comes out below 50, we will see the euro sell off very powerfully, very quickly. And the reason being is because, of course, the German flash services industry or sector will be in a recession. So although, although we're a little bit above that, the figures are nowhere near as what as good as they were last year. Last year we were looking at the mid 50s as a good sort of average theme, until towards the end of the year, October, November, December, very disappointing. And, the forecasts have been revised, down and down and down. So we're starting to see that data make an impact on the euro. So let's keep an eye out over this. I wouldn't expect it to come out below 50. So I wouldn't expect that major volatility. But if we start to get closer to that 50 level, we could start to see it priced in. So guys, into Thursday, we have Governor Polos for the Bank of Canada speaking about monetary policy at the Chamber of Commerce in metropolitan Montreal. So again, we're speaking about monetary policy there for the Canadian dollar on Thursday. There could be some potential there for volatility. I wouldn't expect it to be too volatile, and the reason I wouldn't is because it wasn't a meeting. He's just due to speak about monetary policy at the Chamber of Commerce. He's not releasing minutes or releasing the details of a meeting that they've had regarding monetary policy. So it's slightly different to the other two, slightly different to the US and the Australian dollar, but we could have some volatility, some major volatility nonetheless. Okay, it's still monetary policy. It's slightly different to the other two, but it's still monetary policy. So, guys, we want to tread carefully with the Canadian dollar on Thursday afternoon. Moving into 10:30, Governor Lowe is due to testify before the House of Representatives Standing Committee in Australia. So this, I don't think this will be too volatile in the markets. The Australian dollar has been quite consistent. It's been quite strong. So I wouldn't expect too much in the way of questioning from them there. They may mention how the lack of building and lack of construction around Australia has been affecting the economy, but I think the Reserve Bank of Australia will be more than prepared enough to answer those questions. So I wouldn't expect too much there. And then Friday, finally, we have Mario Draghi addressing the markets on Friday evening, but Friday afternoon. But he is accepting an honorary degree from the University of Bologna in Italy. So, guys, again, I wouldn't expect any volatility from this. He's just making a speech after accepting a degree. So again, that's of no concern to us. So looking to the week ahead, what is of concern? Well, first of all, we have Aussie dollar monetary policy minutes on Tuesday morning. Then we have, on Wednesday evening, we have the FOMC meeting minutes for the US dollar. And then finally, Bank of Canada Governor Poloz is speaking regarding monetary policy. So again, guys, we've got three banks: the Australian Reserve Bank of Australia, the Federal Reserve for the US, and of course the Bank of Canada as well. So Monday, Tuesday morning, and Thursday afternoon, guys, we need to we need to be cautious in the markets, okay, regarding those currencies. I wouldn't like to be in a position in the Aussie dollar over this data. I wouldn't like to be in a position in the US dollar over this data. And I wouldn't like to be in a position in the Canadian dollar over this data. Okay. So guys, let's take a look at the markets. Well, first of all, with this in mind, I'm going to cancel the Aussie US dollar sell limit. The sell limit that we had from last week that didn't trigger, I'm going to cancel that because Tuesday morning, we have Australian dollar data, major data. And then Wednesday afternoon, we have major data for the US dollar as well. So I think it's going to be far too volatile for us there. With this uncertainty, with this continuing global uncertainty around the world, I think it's always good for us to keep a look at the safe haven currencies, and always good practice for us to know what is occurring with price with the safe haven assets. So looking at the commodities first in gold and silver, and then looking further even into the safe haven currencies, the Japanese yen and the Swiss franc. Of course, the US dollar as well, but the US dollar has been quite disappointing with data as of late. So, the other safe haven assets are performing better than the US dollar. So with this in mind, guys, I think what I want to do tonight is to take you somewhere different within the market. So take you away from the currencies slightly and away from the equities markets, and and take you into the commodities markets and begin to look at silver as an asset. I think silver has some great potential, and we had a fantastic movement actually on that took place on silver previously, just a few weeks ago, and I want to show you just how silver can be. So first of all, I just want to take you to this previous movement here and this previous price behavior. And what I want to do is I want to select the Fibonacci retracement, and I believe, was it on this? Oh, apologies. No, this is what I have for you tonight. One moment. Where are we with the Fibonacci retracement? There we go. So yeah, this is what I have for you this evening. Actually, I'll just click off of that retracement for the meantime. Wherever that has gone. Okay, there we go. So looking at silver at the moment. Oh, apologies, guys. Let me just delete that. Apologies, guys. So looking at silver for the week ahead, we've seen now, especially on the macro picture as well, we've seen some fantastic price behavior breaking out of these levels here. And that was it. It was from this level down here was what I wanted to show you. We had some great, real fantastic rejection. I'm just going to take it up to this high over here. I'm just going to take that over to the right hand side just so that we can see a bit more, a bit more clearly. So here we had fantastic price action from, again, I'm just going to take it to the low. There we go, just so that we can see from these lows here. And yeah, let me zoom in so that we can see a bit clearer. There we go. So from these lows, we saw that the buying pressure came back in to silver and pushed the highs back up to 1580s. What we had here was a failure just before the 38.2 Fibonacci level, and the buyers came back into the market here, and we saw some fantastic price action over this level. And this is actually a strategy, well, a market signal in itself from this price action here, and we'll go through in the future and explain these strategies in a bit more depth and a bit more detail for you, so you can truly understand, you know, how we're identifying these price movements. So we failed just before that 38.2 level on the large scale Fibonacci. What I want to do now is just take this back down to a smaller time frame and look. Oh, where was it? To this level here. There we go. From these lows here, silver played out fantastically. And silver does like the Fibonacci retracement. It's yeah, I'm just going to make it a bit bigger so that we can see. There we go. It does like the Fibonacci retracement, so we do tend to use these quite often on silver. And what we're looking for is this previous movement from, you know, from these lows here to the highs. And what I want to do again is I'm just going to take that across. So from these highs, from this low, I'm just going to take this low across as well so that we can just see a bit clearer. There we go. So from these lows here to these highs, again, we look at the 61.8 price level. After we hit these highs, we came straight down to this 61.8 price level, and we found some great buying pressure taking place within silver. And again, we tested this level multiple times within the market, and every single time we closed above that 61.8 retracement level. So what we eventually saw was some brilliant price action, and this was a position that we took a few weeks ago, and up to the 1620s was our profit expectation on that. Apologies, I just seem to have lost the chart. There we go. So we had a fantastic there we go, expectation on this trade position, and as you can see, oh, there we go, that's what I need to do. Squeeze the chart so there we go, so that we can see. So the next level was up towards this 1620 level up here, and you can see that this actually offered us on a much lower time frame a fantastic opportunity to enter for very small risk from about 1530s, just above this 61.8. After we had some good rejection off of that level, it was up towards about 1530. But with a stop below 1515 and an expectation at 1620, there was some fantastic profit to be made. And I think, guys, that we're going to see almost history repeats itself in this instance, and I think that there's some fantastic opportunity to take advantage of this very similar price behavior, this consolidative behavior, and then the momentum movement. We've got further consolidative behavior, and now with just expecting to see that momentum movement. So again, guys, what I want to do, taking a look at silver, is I'm just going to take a look at another fib from the recent lows to the recent highs, just to see if we have any correlation of price with price action taking place up to the highs. There we go. Oh. There we go, up to the highs just before 1620, down from the lows at about 1515. As you can see, guys, again, this 61.8 price level. Again, we're seeing some fantastic price behavior over this level. We're starting to see, the buyers come back in from this level, not able to close below that level. And as we are in this bullish trend with gold over the past, bullish trend with gold and silver, especially over the past couple of months, I think there's some good potential to take another position over this asset. So for me, guys, what am I looking for? Well, let's take a look at the daily very quickly as well, so we can see how it lines up with a fib. Let's get rid of that for the moment. Let's take a look at the daily and see what the price action is looking like. It's very positive. The buyers are looking firmly in control. And again, although the weekly might look a little disappointing, in actual fact, it looks, there we go. Although we have although we have a negative candle, it's not a weak candle. Although we have a negative candle, it's cool. It's a strong candle because we've seen the prices turn back and push to the highs. So I would expect higher prices for the week ahead, and I think that we can get a great entry into this asset. So if we take it back down to the daily once more, and there we go. Maybe even back down into the 4 hourly again. There we go. We can start to look at where to place an order to maybe get picked up on a buy order. Now, for me, I'm not looking at placing a stop entry into this because I want to get the best price possible. We already know it's in a bullish trend. We've seen very similar price action taking place before. So, guys, I want to take advantage of the current opportunity within gold, silver, to place a trade position. So again, with that limit order, with the pending position, what we get is we get the best entry, we get the best price entry for our trade position. So, as mentioned, I'm not looking for that. I'm not looking for that buy stop entry above the highs. I'm looking for a potential price where we may see price come back to and then turn around to get a better price on our position. And I think we have that over silver. The 1562 has been a fantastic price level for gold over the past few weeks. As we can see here, this price action and price behavior here has played its level as support once and twice, and again we've seen some support just above that 1650, so I'm going to mark that level out as well, just because we have a little bit of a zone between 1566 and 1562. So as you can see, this has been both support and resistance before. So it's we're starting to see some good price action. We're starting to see a role reversal taking place over this level. So I would expect this to be tested once more as support before we continue to the upside. So I think there's a high probability we'll see price start to move like this. One moment, guys. There we go. Start to move back down towards that 1560 price area, and then from that level back up to break these highs. Maybe a retest down back to these highs here, and then ultimately the breakout to create new highs. So in terms of where, you know, I want to be looking for a position to be picked up, I'm looking for that buy limit around the 1560s. Now, I think we have a great opportunity on this position, even with the current low, but, you know, 1513 is still an equally good stop for this position, and it might give us a bit more safety using the previous price low. I think if we use 1545, I think it could be a little bit too tight for our stop loss, and you know, we could see prices continue before maybe reaching this level. We go down at the 1540s, the previous resistance level. You know, so we may see prices come down this way before, you know, fall back to this level before, you know, we then see that movement to the upside. But ultimately, guys, you know, I wouldn't expect to see these lows broken. So I think there's some good potential to, you know, just take our stop back to the previous swing low. That's a fantastic swing low. We're using the monthly low of January, which is, you know, the yearly low. We've got our stop below the yearly low for silver. I think that's a fantastic stop, and we've still got a great expectation there. So I think this is what we're, you know, likely to see either happen. So let's get our stop, our entry and our stop. So we're looking for a buy limit on silver, and we're looking for this just in, you know, around that 1560s, in between that range between 1562 and 1566. I think really we can look for the 1566 for our entry into that position. I wouldn't want to be too greedy and look for, you know, those few extra pips on the position. I don't think there's a need for us to do that. So I think, you know, 115.66 ensures that we get an entry into this position, and you know, our order is picked up. So from there, I'm looking, as we just went through, I'm looking for my stop loss below the previous swing low. So the previous swing low was down here around 1520. So I'm going to use this as my stop loss. So 1520, just below the 1524 significant price level, and just around the previous swing low. So the stop loss for this trade is at 1520, giving us a 46 pip stop loss for this position. And in terms of a profit, I would expect it to go on and create a new high. So then we have to take a look into the daily
to see what we have, to see our next levels in the market. And initially, straight away, guys, 1670 stands out, but also we have a temporary level at 1640 as well. Just at this level here at 1635, where we could see the sellers come back into the market. So although the next profit target would be 1680, I think, you know, we could see this the sellers come back in at 1635 and you know, come back down on a profit take and continue in this form of higher highs and higher lows. So I don't want to go too far, right up to that 1670, but to 1635, I think we have some fantastic potential there. Oh, apologies, guys. We've just got to reorganize the charts. There we go. So for our profit target, just below that 1635, we can look for an exit at 1632, just below that level, giving us a potential profit of 60 or 66 pips on that, if my maths is correct. Apologies, it is a bit late in the evening for this. Yeah, 66 pip profit target with a stop loss of 46 pips. So offering us about a 1.5 to 1 risk to reward with this position. But given the current fundamental global fundamentals and the global uncertainties, especially around Europe at the moment, with regards to Italy, France, and Germany, and as well as Brexit. And then, of course, into the US as well. We have the US-China trade war. We have the US's own internal government shutdowns and uncertainty. So I think that a buy position in gold is looking very promising for us moving forward into next week. So guys, do you have any questions for me about the content that we have gone over this evening? Okay, fantastic. So if you don't have any questions, guys, we will leave it here for this evening. This webinar has been recorded and will be available to rewatch at your own convenience. The link should be ready by about 10 p.m, 11 p.m. this evening. So thank you very much for attending this evening, guys. It's fantastic to have you all in here. If you think of any questions in the meantime, then please don't hesitate to give me a message. Once again, guys, thank you very much. Thank you for the kind comments, and I wish you all a fantastic and profitable week ahead. Thanks, guys. Take care, and bye-bye for now.